Welcome back everyone. Today, we're diving deep into a project that has one of the biggest communities in crypto history, Pi Network. So, what is Pi Network? Well, it started back in 2019 with a truly massive goal. The founders, a group of smart Stanford graduates including Dr. Nicholas Kokalis and Dr. Cheng Diao Fan, wanted to make cryptocurrency accessible to everyday people. Their main idea was simple, but powerful. They wanted to create a coin you could mine directly from your smartphone. This would remove the need for expensive, power-hungry computers that dominate the world of Bitcoin mining. It was a vision of digital money for the masses, not just for the tech experts. The project aimed to build a decentralized, secure, and eco-friendly digital currency. The core of this plan was the Pi mobile app. Users could download the app and, with a single tap each day, earn Pi coins. This process wasn't true mining in the traditional sense, but it was a brilliant way to distribute the coin and build a massive user base. Millions of people around the globe joined in, excited by the promise of being early to the next big thing in crypto. The dream was to turn these millions of pioneers into active participants in a new digital economy, all powered by the Pi coin they were accumulating on their phones. This unique approach created a huge amount of buzz and excitement. For years, the community grew, with people faithfully tapping the button on their app, watching their Pi balance increase, and dreaming of the day the coin would have real value. The project operated in an enclosed mainnet phase for a long time. This meant that the blockchain was live, but it was protected by a firewall. Users could complete their Know Your Customer, or KYC verification, and even transfer Pi between themselves within the ecosystem, but they couldn't connect to the outside crypto world. The ultimate goal was always the open mainnet, where Pi would finally be listed on exchanges and trade freely. The entire strategy was built on the idea of network effects. The more people who joined and used Pi, the more valuable the network would become. The team focused on building a vast community first, believing that this would create a strong foundation for a future economy. They planned to develop an ecosystem of apps and services, where Pi could be used for real goods and services. This patient, community-first approach was different from most crypto projects that launch on exchanges quickly. It was a long-term social experiment to see if a cryptocurrency could gain mass adoption before it even had a public market price, building value from the ground up. After years of anticipation, the crypto market finally got a taste of Pi coin's value. However, the story took a sharp turn in late 2025, and it wasn't the moonshot many pioneers had hoped for. The coin's price experienced a significant and shocking drop, leaving many in the community bewildered and worried. After reaching some initial highs driven by pure speculation and hype, the value began to slide. By the end of the year, Pi coin was trading at a fraction of its peak, settling around a disappointing 20 cents. The dream of becoming an overnight millionaire faded for many, replaced by the harsh reality of a struggling market. So, what exactly caused this dramatic crash? It wasn't just one single thing, but a perfect storm of several problems that had been brewing under the surface for a long time. The biggest factor was a massive crisis of confidence among investors and the community. The prolonged delays in launching the open mainnet had tested everyone's patience. People who had been faithfully mining for years started to wonder if the project would ever deliver on its promises. This uncertainty created a lot of fear, and when fear takes over in the crypto market, people start selling, which drives the price down even further. The drop was also fueled by the coin's limited availability and lack of real-world use. Pi was only available on a few exchanges, and none of them were the major players like Binance or Coinbase. This meant there wasn't enough liquidity, or money, in the market to absorb the selling pressure. When early miners who had accumulated thousands of coins decided to cash out, there weren't enough buyers to support the price. The result was a downward spiral. The very community that was meant to be the project's greatest strength accidentally became a source of immense selling pressure, creating a situation the limited market simply couldn't handle. Furthermore, the broader crypto market was in a hard reset phase. Investors were no longer interested in projects based on hype alone. They wanted to see real utility, active development, and a clear path to profitability. The days of buying into a project just because it had a big community were over. Pi Network, which had relied heavily on its community size as a measure of success, was suddenly faced with a market that demanded more. It needed to prove it was more than just a social experiment. This shift in market sentiment hit Pi particularly hard, exposing its fundamental weaknesses and contributing significantly to its shocking price drop. One of the biggest clouds hanging over Pi Network has always been the timeline. The journey from the initial testnet to a fully open mainnet has been incredibly long, far longer than anyone expected. For years, the core team promised that the open mainnet was just around the corner, but the goalposts kept moving. This endless waiting game has been a major source of frustration for the community, and a huge red flag for serious investors. In the fast-paced world of cryptocurrency, where new projects launch and deliver value in months, Pi's multi-year enclosed period started to look less like a careful strategy and more like a sign of trouble. These development delays had a direct impact on investor confidence. Early on, the excitement was enough to keep people engaged, but as 2024 turned into 2025 with still no firm date for the open mainnet launch, patience wore thin. People began to question if the development team was capable of delivering on such a complex project. Rumors and speculation ran wild. Was the technology not working as intended? Were there internal disagreements? This lack of clear communication and tangible progress created a vacuum of information that was filled with fear, uncertainty, and doubt, which is poison for any crypto project's price. The slow progress on the KYC process also added to the frustration. For a user to be able to use their mined Pi, they had to pass a Know Your Customer identity verification. However, the system was plagued with backlogs and technical glitches, leaving millions of users stuck in limbo. They had mined the coins, but they couldn't access them. This created a huge bottleneck. Even if the open mainnet had launched, a large portion of the user base wouldn't have been able to participate. This slow and inefficient process made the project feel disorganized and unprepared for a public launch, further eroding trust. Ultimately, the failure to launch the open mainnet in a timely manner was the core reason for the 2025 price stagnation and drop. Without an open mainnet, Pi coin has no connection to the broader crypto economy. It cannot be freely traded on major exchanges, used in decentralized finance applications, or integrated with other blockchains. It remains trapped within its own closed system. This isolation severely limits its potential and makes it unattractive to new investors who want liquidity and opportunity. The long wait has turned Pi's massive community from a patient army into a restless crowd, desperate for the project to finally step onto the main stage. Beyond the development delays, Pi Network faces an even more fundamental challenge: a serious lack of real-world utility. For any cryptocurrency to have long-term value, it needs to be used for something. People need a reason to buy it, hold it, and spend it. For years, the primary use case for Pi was simply accumulating more Pi by tapping a button on an app. While this was effective for building a community, it did not create a real economy. As the project matured, the glaring question became, what can you actually do with Pi? The answer, unfortunately, was not much, and this became painfully obvious in 2025. The vision for Pi was always to build a vibrant ecosystem of decentralized applications and a marketplace where goods and services could be bought and sold using PiCoin. The team held hackathons and encouraged developers to build on the platform. However, the results have been disappointing. The ecosystem is still very small and lacks a killer app that would attract millions of users. Most of the available apps are simple experiments or services with limited appeal. Without compelling decentralized apps or a significant number of merchants accepting Pi, the coin remains a speculative asset with no underlying economic activity to support its value. This lack of utility puts Pi at a major disadvantage compared to other established cryptocurrencies. Ethereum, for example, is the backbone of the DeFi and NFT worlds, with thousands of applications running on its network, processing billions of dollars in transactions. Solana is known for its high speed and low costs, making it a favorite for trading and gaming. Even newer projects often launch with a clear use case, whether it's in artificial intelligence, supply chain management, or data storage. Pi, in contrast, entered the market with a huge community but very little for that community to actually do with their coins. This utility problem was a key driver of the 2025 price collapse. When the initial hype faded, investors looked for substance and found very little. The market is shifting to reward projects with tangible value and working products. A large user base is no longer enough. Without a reason to use Pi in their daily lives, many people saw no reason to hold it, especially when other projects were offering real returns and innovative features. For Pi to recover and thrive, it must transition from a social mining experiment into a functional, bustling economy. The future of its price depends entirely on creating real, undeniable utility. The Pi network community has always been its greatest asset. Numbering in the tens of millions, this global group of pioneers was built on shared hope and a belief in a more accessible financial future. For years, this community was a powerful force of positive energy, promoting the project and patiently waiting for its launch. However, the events of 2025, particularly the sharp price drop and the continuing delays, have pushed this community into a state of crisis. The initial excitement has been replaced by widespread frustration, confusion, and division, posing a serious threat to the project's future. A major problem is the immense potential selling pressure from this huge user base. Millions of people have been accumulating Pi for years with little to no financial cost. For many, even a low price of 20 cents per coin represents a significant profit. When the coin became tradable, a large number of these early adopters understandably decided to cash out. This created a massive wave of selling that the limited market simply could not absorb. Even a small percentage of the community selling their holdings at once can cause the price to crash, and this is exactly what we saw. The community's size became a double-edged sword. This situation has also created a divide within the community itself. On one side, you have the hodlers or true believers who continue to support the project, encourage others to hold their coins, and believe in the long-term vision. They argue that selling now is short-sighted and that the real value will come once the ecosystem is fully developed. On the other side, you have a growing number of disillusioned users who feel let down by the project's slow progress. They are tired of waiting and are eager to take whatever profit they can get. This internal conflict creates a negative atmosphere and makes it difficult to present a united front to the wider crypto market. To move forward, the community must face some hard truths. The dream of Pi instantly reaching high values like $100 or more upon launch was always unrealistic. The value of any asset is determined by supply and demand, and with a massive supply of freely distributed coins, the initial price was bound to be low. The community needs to manage its expectations and understand that building real, sustainable value is a long and difficult process. It requires more than just holding coins. It requires active participation, building on the platform, and attracting real-world businesses. The crisis of 2025 was a painful but necessary wake-up call for everyone involved. After the turbulent events of 2025, everyone is asking the same question. What does the future hold for Picoin's price? Looking ahead to 2026 and beyond, expert predictions are, well, pretty mixed, reflecting the deep uncertainty surrounding the project. There's no easy answer, and the coin's future price will depend heavily on whether the development team can finally deliver on its promises. Analysts have mapped out several scenarios, ranging from cautiously optimistic to deeply pessimistic, painting a complex picture for the years to come. The price is currently consolidating at a low level, creating a critical moment for the project. For 2026, the short-term outlook is one of cautious hope. Some technical analyses suggest that if Pi can maintain its support level around 19 cents and break through resistance at 27 cents, a recovery is possible. A more optimistic forecast predicts a potential rise to the 30 to 50 cent range by the end of 2026. This scenario depends entirely on positive developments, such as a confirmed open mainnet launch date, significant progress in ecosystem development, or even rumors of a major exchange listing. Without these catalysts, the price is more likely to continue stagnating or even drift lower, potentially falling to 16 or even 13 cents if support breaks. Looking further out to the 2027 to 2030 period, predictions diverge even more. In a moderate, gradual growth scenario, where the Pi team slowly executes its roadmap, we could see a steady climb. Projections in this case suggest a price of around 45 to 70 cents by 2027, potentially reaching $1 to $1.6 by 2030. This path assumes that the open mainnet launches, the ecosystem begins to attract real users and businesses, and the coin gets listed on more reputable exchanges. It's a slow grind upwards, not a dramatic moonshot, reflecting the long journey of building real sustainable utility in a competitive market. However, there is also a more optimistic, though less probable scenario. Some long-term believers suggest that if Pi Network successfully transitions into a fully decentralized Web3 ecosystem and leverages its massive user base, the price could be significantly higher. In this best-case scenario, with widespread merchant adoption and a thriving DApp ecosystem, some analysts have floated targets between $5 and $15 by 2030. This remains highly speculative and would require flawless execution and a major shift in market perception. The shocking truth is that the future price is not yet written. It will be determined by the actions the Pi team takes starting today. The price collapse of 2025 served as a brutal reality check for Pi Network. To recover and build a sustainable future, the project must move beyond promises and take decisive action. The path to recovery is clear, but it is also challenging. First and foremost, the team must launch the fully open mainnet. This is the single most critical step. The enclosed system has served its purpose of building a community, but now it is holding the project back. Launching the open mainnet would finally connect Pi to the global crypto economy, enabling true price discovery and opening the door to a world of possibilities for utility and integration. Secondly, Pi Network must aggressively pursue listings on major, top-tier cryptocurrency exchanges. Being listed on platforms like Binance, Coinbase, or Kraken is essential for legitimacy and liquidity. These exchanges bring massive trading volume, a larger pool of potential investors, and a stamp of approval that the project is credible. A listing on a major exchange would be a powerful catalyst for the price, as it would make it much easier for people to buy and sell Pi. This would help stabilize the market and provide the liquidity needed to absorb selling pressure from early miners, preventing the kind of crash we saw in 2025. Beyond these crucial first steps, the long-term focus must shift obsessively to building real-world utility. An economy needs goods and services, and the Pi ecosystem is currently empty. The core team needs to provide better tools, incentives, and support for developers to build useful dApps on the network. They must also launch a major initiative to onboard merchants, both online and local, to accept Pi as a form of payment. Imagine being able to buy a coffee, pay for a freelance service, or shop online using the Pi you mined on your phone. This is the vision that will create real, sustained demand for the coin. Finally, the project needs a revolution in communication and transparency. The community has been left in the dark for too long. The core team must provide regular, honest, and detailed updates on their progress, challenges, and timeline. A clear and public roadmap with achievable milestones would help restore faith and manage expectations. They need to treat their massive community not just as users, but as stakeholders in the project. By being transparent about their plans and progress, they can begin to rebuild the trust that was lost and rally their community for the long and difficult journey of building a truly decentralized and valuable network. Pi Network does not exist in a vacuum. It has entered a fiercely competitive cryptocurrency market that is already saturated with thousands of projects, each fighting for users, developers, and capital. To succeed, Pi must do more than just exist. It needs to offer a unique value proposition that sets it apart from established giants and innovative newcomers. Its primary challenge is competing against other Layer 1 blockchains like Ethereum, Solana, and Cardano, which already have massive, thriving ecosystems and a significant head start in terms of technology, adoption, and developer mindshare. These established players have spent years building their infrastructure, attracting billions of dollars in investment, and fostering vibrant communities of developers who have created thousands of dApps. Ethereum is the king of DeFi and NFTs. Solana offers incredible speed and low transaction fees, making it ideal for gaming and high-frequency trading. Pi Network, on the other hand, is still trying to get its basic infrastructure fully operational. It is years behind in the race for developer talent and real-world applications. Its main advantage is its huge user base, but it is yet to prove it can convert those users into active economic participants. The competition also comes from newer, more focused projects that launch with immediate, tangible utility. For example, some new projects in the AI crypto space are launching with live tools for market analysis, contract scanning, and automated trading. These projects attract investors because they solve a specific problem from day one. They offer clear value, which is exactly what the modern crypto market demands. Pi's approach of building a community first and figuring out utility later seems outdated in this new environment. It's a tough sell when other projects are delivering working products right out of the gate. To stand out, Pi must leverage its one unique asset, its massive global and mobile-first community. Its success won't come from trying to be a faster or cheaper Ethereum. Instead, it should focus on creating a simple, user-friendly payment system and dApp platform for everyday people. If it can make using crypto as easy as using a simple mobile app, it could carve out a niche for itself focused on microtransactions, social media tipping, and local commerce. The fight will be incredibly tough, and Pi is currently the underdog. It must innovate and find its unique place in the crowded market, or risk fading into obscurity. As we stand at the end of 2025 and look toward the future, the story of Pi Network is a tale of immense potential weighed down by significant risks. It is a project defined by a powerful vision, a massive community, and a series of frustrating setbacks. The final verdict on Pi is not yet written, but its future hinges on navigating the huge hurdles that lie directly in its path. The hope for Pi lies in its original, groundbreaking idea making cryptocurrency accessible to everyone. No other project has managed to attract such a vast and diverse global community, and that remains its single greatest strength. The risks, however, are undeniable and severe. The project is plagued by a history of development delays that have shattered confidence. It suffers from a critical lack of real-world utility, leaving its coin with little to support its value beyond speculation. The failure to list on major exchanges has crippled its liquidity and legitimacy in the wider market, and its own massive community, once a source of strength, has become a source of immense selling pressure. These are not small problems. They are fundamental challenges that question the very viability of the project. The price drop of 2025 was not a random market fluctuation. It was a direct consequence of these deep-rooted issues. For Pi to have any chance of a successful future, the path forward requires radical change. The core team must deliver the open mainnet without further delay. They must secure listings on top-tier exchanges to create a stable and liquid market. Most importantly, they must pivot from a social experiment to an aggressive business-building machine focused on creating a real, functional economy on the Pi blockchain. This means fostering a DApp ecosystem and onboarding merchants with a sense of urgency that has been missing for years. The time for promises is over. The time for execution is now. So, what is the final verdict? PiCoin is a high-risk, high-reward bet on a team's ability to turn a massive social network into a functioning digital economy. The road to 2030 will be long and difficult. If the team fails to execute, the coin's value will likely continue to disappoint, fading away as another ambitious crypto dream that couldn't deliver. But if they can overcome these hurdles, launch their platform, and successfully mobilize their millions of users, Pi Network could still become a significant player in the world of digital payments. The journey will be one of the most fascinating stories to watch in the crypto space.